Good morning, everybody. Cowboy here. Got Ben Kelleran with us. Kelleran's Corner. And sorry to start a little bit late. Ben and I were just having a little fun with making the thumbnail today. So we wanted to change things up, and it was an absolute hoot, if you will. We have some goodies for you in the description. You can have a free Algo from Algo Factory, paid sponsor. It's a pretty cool thing. Video shows you how to build it, how to connect it to your broker so the computer can trade while you're not even sitting at the computer. You do have to optimize the algo before you trade it, though. Now you have Ben and all the ways to reach you. They're also in the description. But for the people who don't know how to look in the description, maybe they're just listening, Ben, can you call out how to find you real quick before we get started?
Yeah, so if you just look up Contrarian Corner, you can find it on Apple Podcasts or Spotify if you're just looking for the audio. But you'll find a lot more stuff on the Substack, and that's where I do kind of deep dives on individual companies. I put up my 2026 kind of markets predictions for this year on different things just on Sunday. So different posts, different podcasts, different stuff like that. So that's the best place to find me.
Your pod's doing pretty well, right? I'm kind of watching the numbers, and looks like a lot of people are like what you're doing. And of course, I like what you're doing. We have you here on Rogue.
Yeah, no, I've had some really good guests. Definitely have to get a repeat appearance from a couple as we kind of head into 2026. Try and get Luke Growing back and a couple others. I think would be a good way to kick off January. So,
yeah, man, that was probably one of the best shows I've seen, not just on your channel but on the internet. That was a really good podcast. So you were talking with me a little bit about silver miners. I know the last we spoke, you were talking about maybe like a basket of miners, and so seeing as that is the theme, and silver is what now at $80 and climbing. What do you got today?
Yeah, I figured we could put the silver miners on hold just for like 5 or 10 minutes and talk
Sure.
a little bit about the whole Venezuela circus. That's it's interesting to see some of the reactions from people because everyone seems to be like all hyped up about it or really pissed off, and it's just there's not enough people that I think take a step back and realize that it's probably better to be less emotional about it and just try and be kind of indifferent. So like I have mixed feelings on the whole idea that we should be doing regime change again, but the right, it is kind of realpolitik approach to it where it's like, okay, this is in our backyard. Russia and China are trying to play games and have influence there, so we should have an idea of what's going on. But it's just interesting to see some of the reaction to it. And I'll share my screen here. We can kind of get into some of the high level stuff that I thought was worth talking about a little bit. But I'll tee it up with a joke if you can share that. This is kind of one of the funniest things I saw people joking about with if it was the SEALs versus if it was the Delta team. So
Right.
get a bunch of podcasts and books and whatnot. But anyway, on a more serious note, the news is going basically all over the place talking about, oh, it's going to take hundreds of billions of dollars, or I mean, pick your ridiculous number to ramp up production in Venezuela. The biggest roadblock is going to be, can you convince Exxon, Chevron, ConocoPhillips that they're not going to be like doing the whole Groundhog Day of, oh yeah, you get 5 or 10 good years and then your asses are gone, right? So I think ConocoPhillips basically, they haven't got this payment, but they got an international court judgment for like 12 or 13 billion dollars, right? So we'll see kind of what happens with that. But right, if they're not confident that there's going to be some stability, they're not going to invest. Like that's the short version. The guys that are really going to benefit, right? None of the producers are going to be all that thrilled about trying to do all this with oil at 55, 60, somewhere in there. Right. But if you look at like the reaction from like the oil services ETF and some of the big guys like Schlumberger, like I own a tiny bit. But like even what's the other one? Halliburton, stuff like that. Like those are the names where even if oil's at 50, right? If they get the massive capex boom that you would need to actually ramp production in Venezuela, and obviously this is like talking out 6 months to a year plus, that's where you're going to see things really inflect. So if you're looking for an energy name that is exposed to it, right? Schlumberger and all these other guys have popped a bit. I wouldn't be surprised if they kind of come back down for short-term reasons, but longer term, if this does play out this way, like I think those names work out well. If it doesn't turn into a big capex boom, they're still pretty cheap. So
you know what I think about that? Even if the real production doesn't ramp up, even if it stays where it is or slightly ramps up, or they could write an article that makes people think that real production has ramped up, I think that we are still in the world of like, and you know, V the Gorilla, if he were here, I don't want to steal his thunder here, but the way he says it is that real production, real economy is just like anything in that is going to be a cottage industry to finance, right? That's how he says it. So finance essentially is what's going to push everything, especially like late stage capitalism. So I think even if we could claim that we have deals and some form of control over the oil down there without really doing any big moves in the real production area of things, like the capex will move, international money will flow just based on the illusion. You know what I mean? And even the fact that we could tell countries, you know, yes or no, you can or can't have that oil. That's probably just enough to cause money to move slightly or more into that sector. So just my opinion.
Yeah, well, you saw it a couple months ago with what's his name, Paul Singer, the guy who runs Elliott and is a very well connected Zionist, I guess is a short version.
Right.
I think he bought the Citgo refinery, which is basically tied up in this whole Venezuela situation like 2 months ago, right? So he knew a guy who knew a guy. So we'll leave it at that. But
I think one of that guy was you know, in a very small country and somewhere in the Middle East.
Yeah. Could have been.
And maybe our president. I don't know.
Yeah. Might have been close family friends with Kushner. But anyway, basically when you see stuff like that, right, they're kind of like, for better or worse, they're positioning in some of the names like the refineries. What's the ETF? I think this is the best ETF ticker for a sector, by the way. Crack.
What's the ticker? Can you call it out?
Yeah, CRAK. So this is just all the big refiners. Yeah, that's what I was saying. It's the best ticker, but like Rob is saying, you meant
it was the best ticker, like from an investment standpoint.
Oh,
but
no,
you're saying it's the funniest ticker.
Yeah. Like Rob is saying, this is gonna have stuff like Valero, Marathon Petroleum, all that stuff, and you kind of look at where guys like which subsectors are going to benefit. It's going to be refiners. It's going to be the services guys that are on the ground, right? They have to replace the pipes and all the stuff that's 30 years old and beat to shit or stolen or whatever has happened to it, right? So those guys are going to do well. And then, right, the producers will be all right with oil at 58, 60, but the only guys that are really going to benefit are the big like super majors, right? And that's Chevron, Exxon, ConocoPhillips, right? And those are the big three that might or might not be going in. And obviously this is all kind of looking ahead where it's going to take at least a couple quarters to get a move on there. But that's kind of the first look of what I'd be looking at as far as energy. So
nice. Hey V, how you doing, bud?
Hey guys, how are you guys?
We're good. We're talking about oil companies that might be affected by what's going on in Venezuela. And V, this is something that I'll allude to. So I've already said it, but you just got that whole way of saying things that everybody loves. So whether or not we do anything with real production in Venezuela, just the fact that on paper we have some control over it can cause money to flow into that sector. Like that, I'm being polite about that, but I don't know if you want to explain to the audience a little bit. I don't want to step too much on Ben's show here, but just to kind of relate it.
I mean, that's pretty much what it is. I mean, whatever we can get out of there of hard, heavy, sour crude, it's just going to be sold from out of the ground. In terms of for these companies to get there, ramp things up, really get in there. That you look at a map that where the Orinoco Valley is. It's very hard to get stuff in and out of. It's a difficult terrain, and I think by the time we ramp up any sort of production, it'll be at least 10 years. And to bring that oil to market, it's not really going to make a dent in anything, but it looks good. You know, when you have deep storage gold and you got deep storage petroleum and you got deep storage and you're using electricity, you know, that's all you need for GDP numbers these days, guys. That's all you need. Well, electricity consumption and deep storage, everything.
Well, I think the thing that's going to be interesting to see is we'll see signs of it. Like you said, they're not going to get to 3 or 4 million barrels overnight of production, but it's not obviously not flipping a switch. But as far as like the build out and can it be done, it's like it can be done. But if you're trying to, like, if you have to have security on the pipelines, so you don't have like people bombing them, like what just has happened in other South American countries, stuff like that. Right, it's not going to last. So it kind of depends on what the operating environment is like and how willing these companies are to go and take a run at it. And I mean, you look at some of the lifting costs, I think they'd be perfectly open to the idea. So it's, but like you said, it's not an overnight process. The other thing I was going to add too is, like, I was curious to see what the kind of news websites would be saying about this whole.
Do you need me to put that back in the screen for you, Ben?
No, not for this part.
Okay, sorry. Go ahead. Sorry to interrupt you.
Basically for the New York Times, the New York Post, and CNBC, all these different places, like what they're saying, they're all basically poo-pooing the fact that Trump is saying, oh, well, we can subsidize them on the back end or do all this stuff. Like, I think they're basically, or I'm not saying they didn't have an idea of what they're going to do, but they're kind of at the point of the plan where it's like there's still a lot of stuff in flux and they're not going to have a PowerPoint presentation that they can say, here is the step-by-step process of what we're going to do. So it's funny to see all the kind of mainstream media outlets jump on this and say, oh, it's too expensive, they can't do it, all these different kind of headlines. But one of the things I was looking at, because I was just curious, is the production numbers from Exxon, Chevron, basically like the 4 biggest U.S. producing companies, and they have obviously international assets. But between Exxon and Chevron and Oxy and ConocoPhillips, like, you're basically matching the production from Saudi Arabia. And right, it's not just U.S. They have Guyana and they have other places, but that doesn't even count the smaller guys like Diamondback and the Permian and stuff like that. If you look at where U.S. production is as far as just like a number of barrels, is pretty impressive. And I'm not saying it's going to be exactly like our own version of OPEC, but if you start to exert influence over Venezuela, the one that I do want to show, if you can share this map here, this was something I think is interesting. Everyone kind of looks at basically what happened in Venezuela and is trying to figure out, like, okay, why is it going backwards? Anyway, can't really zoom in, but basically everyone's looking at Venezuela and saying, all right, who's next? And I think you're going to see, like, they're already talking a little bit about Cuba. I don't think that takes a huge jump to get to. How long does it take? I don't know. But, if you take Cuba and then Greenland, which I think is probably more complicated than some people are making it seem. But at the end of the day, it's not like, if you're going to play like the power politics, like real politic of it, and we're going to actually try to kind of consolidate North America and exert more influence over South America, then, it goes back to the games that, like, I was playing as a kid. Like, when you're playing Risk, if you have Greenland and you have North America, it's a pretty interesting setup. So, and there are, I think the technical term, a shitload of resources in Greenland. And it's everything from gold, I'm sure silver, like go down the list. Like Greenland has a lot of stuff that the US and the US military is on the hunt for. So I think it'll be interesting to see what happens there. I know someone was talking about the Alberta independence thing, which I don't think Canada is going to be a country in 10 or 20 years. Probably, maybe it takes a little bit longer, but when they're milking Alberta and Saskatchewan the way they are, right, that's not going to last forever unless they make some changes. So, does it happen in the next 3 to 5 years? No idea. So,
if I may, with that, was talking with some of the Algo factory guys this morning, whether or not we see conflict like military kinetic in the future. It's a different era now, and our capabilities are overestimated by most Americans, but yet we do have a pretty darn good military compared to, Venezuela. So, we can project some power. There's arguments, and I don't want to get into those. But one thing I will say is that it's a clear pattern when empires are dying, they start to go to war because their young men don't have a way to make any money. So, they can send those young men off to die instead of fighting inside of our country because they're upset at the leadership. They'll go give them someone else to fight. So this may never happen. We may never get there. But if everything devolves so badly around the world that there is real problems, starvation, all these things, war is like a pretty good option because that's a good way to get rid of people who might otherwise cause problems inside the country. Things become a bit more authoritarian. So just to see the stage being set up right now for Greenland, Canada, like all of that is one of those things like, is this a threat or are we kind of betting on just in case we need to? It's just a lot of stuff like that. So I just wanted to kind of point towards that. Keep your eye on that, whether or not it's kayfabe or real, or it could be both. I'll leave it right there.
Yeah, well, I think they're going to have a tough time getting people to sign up for another go around in the Middle East and some of the other places that might be a potential war zone, I guess the way I'll put it. If you see somehow the U.S. getting invaded, then I think that's a completely different story. So
I think it's going to be the opposite. I think U.S. will be the aggressor because that's how we're behaving right now.
That's what I'm saying is like, I don't think we're going to get invaded. I'm just saying, I don't know if you're going to get like people to go along with a draft in theory or sign up in large numbers to go fight for, especially the current political class, the way they act. So
yeah, I'm with you. It's who's going to go invade another country for some corporate profits, right? Like, I get it.
Well, it's like even in the past where if you were fighting like for an empire, which is what the U.S. is now, right? You can't look at the past 80 years and decide like what we've kind of done with our military bases all over the world and foreign policy, right? That's empire policy, right? It just is what it is. And right, there are people talking about, oh, we like can't mess with the sovereignty of Venezuela, like they're a sovereign nation. It's against international law. Like all that shit goes out the window when like things are on the line, right? And people, I think, in our political class are finally figuring out that, hey, like China's not gonna sit around and just do nothing, right? There's a reason you see some of the stuff going on over there. You like all this stuff, and this ties into markets, and this is where I think it's kind of the perfect segue into what's going on with gold and silver, because you have, I think, what is going to be just a massive run that is set to continue from here. So this is one where like people will look at silver and they'll say like, oh, I probably missed it. And yeah, is it better to be buying like year and a half ago, 2 years ago? Sure. But right when you're breaking out of like a 45-year base, basically, let's see. Right? This train doesn't stop at like 85 or 90, right? And so the point on that is, right, if you're going to zoom out and say, where does this go, and compare it to, like, I did a video on this kind of in more detail the other day, but like if you just compare it to regular equities, like what does this valuation look like over a very long time frame, right? Go back to Hunt Brothers, and okay, that you can pull that out because it's financial manipulation or whatever, right? Which side of this trade is cheap here on this chart? Is it silver, even though it's run in the last like year, or is it S&P, right? So do I know where this thing goes? Are we going to go to silver like 200, 300, 400? Like, I have no clue, but I don't think it stops at $100 an ounce. And this gets into, before I rant on platinum, which is, I think, going to be the best performing metal this year, if I had to guess. I do want to talk a little bit about the silver miners, because they have been basically asleep at the wheel on some of the moves. For the most part, where like if you priced like I like to do the fundamental side of things, like figure out what a company's worth before I go and buy something. I have been using more charts and all that stuff, but right, if you go and look at like the major stocks in SIL, for example, which is the biggest silver mining ETF, right? All these things are pricing in 50 an ounce silver, maybe. I mean, it depends on the company. A lot of the juniors are pricing in like 35, 40 an ounce, right? So it's kind of one of those things where I don't think you go and full port like some junior shitco miner because it's going to go up 1,000% or keep going to the moon. But I think a basket of some of these things is going to work out pretty well. And so like this is technically the silver juniors, which if you look at the run that has basically happened since, let's see, call it like end of November, early December, right? The fact that this is only up like 20% is just like an absolute joke when silver has gone from, let's see, end of November, we get the Friday power outages at the data centers for the CME, right? Silver's up by a third and the miners are up by 20%, right? So there's your disconnect, where these are supposed to be like leverage plays, and a bunch of the miners that I like are either producing right now or about to start production. And you start running numbers, it's like, okay, this is gonna print its entire valuation in 2 to 3 years at this rate. So
I think with the with that, you have to consider, like, for example, at retailers, precious metals retailers, a lot of them are paying less than you would think right now. And that's because their wholesalers are paying less than you would think, because they're all either unaware of or hedging against the fact that what's going on right now is going to retrace, because they don't know. They're just going, a lot of people have no idea what's going on in geopolitics. They're just looking at the number. And
well, here's the not the pushback, but here's a point, like exactly on that thread. There's one of the mining CEOs from, I think it's Peru. Apparently Chinese groups have been approaching like all the producing mines in South America, trying to get as much concentrate as they can out of there. And they're basically saying, yeah, we'll pay 80 an ounce. And this, I think, video was recorded, I don't know.
You know, talk about the AI Chinese guy.
No, I was going to get to that though. This was actually like a real life mining CEO.
I should say AI Asian guy, but I think we all know where that's coming from.
Yeah. But it is funny that like the whole AG thing is the basically elemental symbol for silver. But anyway, like this CEO is basically saying China is going around trying to get as much concentrate as it can, willing to pay a premium. And this goes back to like my big picture theme on like the split between different markets. And so for anyone that's not familiar, this number's not gonna mean much to anyone until I actually convert it to US dollars. But this is the Shanghai exchange for silver. And so when I do switch it to US dollars to an ounce, right now that's at $87. Call it 88, knocking on $88, while Western silver is basically getting dragged, kicking and screaming higher. So 80, pushing towards 81, right? But gaps this wide should not happen. And this is where you have basically the physical difference, the physical settlement in Chinese markets. That's a huge part of like where this gap is. And if there's enough physical silver in the West, this gap would be closed very, very quickly. So, and this goes to, let's see, I had a link here somewhere, might have lost it. But there's a good Chinese account that follows like the, I'll have to, what's this? Xiao, I think. Yeah, okay. It's this guy. If you guys want to follow, like, he basically just tweets about markets and stuff. Like, there's no kind of nothing to worry about. But if you look at where like Chinese markets are compared to Western markets, you'll notice silver, and this is where I can kind of shift into my favorite metal that flies under the radar, which is platinum. Right, platinum right now is trading at almost $27.50 an ounce in Shanghai, and palladium's at 2,100. And right now on my screen, I see, up 7% today. Shocker, but it's still like a 10% gap, right? And palladium is, what was that, 12 to 15%, right? So when you have all these contracts that are like physically settled, and I wrote about this, I don't know, a couple weeks ago, but the palladium and platinum palladium like futures contract just started trading in Shanghai, I think end of November. And if you look at what's happened to platinum since then, I think it's right. Yeah, this bar in here. Like, this is when the futures started trading in Shanghai. So 1,600 an ounce, up 50%. And palladium, like same thing, where end November right in here. Definitely had like a monster move, and then like giant. I'm not sure like how much stock to put in candles like these, because I think they're kind of fake and manipulated. But right, when you're bouncing right back up, right? I think platinum are both going to all-time highs. I'm partial to platinum, but when you look at some of the stuff and you kind of go back to, okay, physical markets, like physically settled, people that want the metal, this is the price, right? People can draw crayons on charts and say X, Y, and Z about margin hikes at different exchanges. But at the end of the day, like, the pricing power is going to go to where like the metal is actually being traded, right? Not paper derivatives. So this kind of is like one of the big themes I think to watch for. Eventually this will happen to like the Brent crude contract for oil, and that'll take, I'm not sure that's a 2026 thing. That's maybe an end of the decade thing. But when you kind of see like the physical reality asserting dominance over paper markets, right? These are the kind of moves you're going to get where people look at it and say, oh, this is overbought. Like, it's not going to keep running. Same with silver. Like, yeah, is it time for a break when it goes from 71 to like 80 in a day? Sure. But at the end of the day, like, if the physical metal is still trading at a premium, right? I think that's where it's basically going to head higher. So that's kind of
to that, another bit of real world data point as opposed to chart info.
Yeah.
It fits right into what you're saying. In the UK right now, for silver ounces are selling for the US equivalent of $1.15. So, now that might reflect, that's a retail thing, and it might reflect a shortage of retail silver versus how it is here in the US. But at the same time, I think that any retailer, any wholesaler here in the US who is holding back on price is either making stuff up or they are not properly capitalized, because, at that point, if you're that far up the chain, you should know what's going on. You know what I mean?
Well, I actually kind of helped a family member buy a couple ounces of silver just over the weekend, and they want American Eagles. So that's going to be like, if you're just looking for the most metal for the lowest price, like you're not going to be buying American Eagles, but they wanted the Eagles. It was just like, okay, it's a couple ounces, no big deal. But so like that was, I think, I don't know, 2 or 3% of the premium. But the physical, if you're just buying an ounce at a time here or there, I think this was with silver, I don't know, like 70, low 70s, 72. And I think you could basically buy it. I looked at a couple different websites, like 82, 83, right? And so you take some version of business spread, because these guys have to make money, right? They need to be buying below spot, selling above spot, otherwise they go to business. But right, is it a $10 gap? Like, I don't know, right? So the American Silver Eagle was 84, 85, and that was with silver at 72. Yeah. So
yeah, that's a 12, 13 point. That's a quite a premium, because I don't know what it is right now. Let me see. I'm gonna look over.
well, it'll be like 90 now because silver's at $80. So
That's a $10
at least, yeah.
What do you call it? Premium. So I'll take a look on there while you're talking. Let me change the screen up a little bit here.
Yeah, I was gonna just mention that, but anyway, the thing with the physical markets and actually trying to get your hands on silver is, like, I've been saying this about gold, silver, and platinum for the last like 3 months straight, where it's gonna look overbought, and there are gonna be times where, like, just flip my screen over to gold, where it's like, yeah, when it's going straight vertical, you probably are gonna have a tough time buying it. But if you get any pullback, like, you're gonna want to be adding if that's your if you have the option to do that, right? And like the gold run does not stop at 5,000, silver doesn't stop at 100, platinum doesn't stop at 3,000. Like, I think we're getting to that level, I think, easily this year for a lot of them. And there are a lot of very sharp people that are calling for a lot more than that. But I mean, I try to be relatively conservative into what, like, I bake into some of these guesses. But at the same time, when you start to see like some of the physical, like when you have Samsung, right, which is one of like the major corporations for like batteries, and they need their silver, when they're going directly to mines to like make offtake agreements, right? That's not a well supplied market as far as they can just go to like the commodity exchange and lock in their contracts, and they feel great about they're going to get all the silver they need, right? It's a hassle to go and, like, they literally financed, was it Silver Storm? It was one of the mines in Mexico. They did like a financing to get an offtake agreement for 2 years for their 100% of their production, right? So you have stuff like that happening, and I think it's going to keep happening because these industrial guys, like, at the end of the day, like, they don't really give a shit if silver's at 80 or 85 or 90, 95, right? They need it to make their products, right? And yeah, it might get more expensive if it's a major component, but like, that's where industrial demand is going. And I think you're going to see investment demand pop up pretty meaningfully this year as people kind of like look around and figure out the game, right? And that's like debt levels, and that's what's going on with politics and all this other stuff, right? The lowest risk investment out there is precious metals, like held in your custody or like in a place that you can trust, right? It's not cash in a savings account. It's not, right, in a brokerage account or anything like that. So before you do go buy miners, I think everyone should have physical precious metals. Depends on how much you want, but anyway, like, that's the, I think everyone should have some allocation to it, and you're not going to get inflated away. They can't be printed. And you have, I think I was reading something. This may be a good question for V. I don't know if you saw this, but the Bank of America and Citigroup combined short position. There's an article that said it was like 4.5 years of mine production. Is that correct? Or do you know?
I'm not familiar with it.
Okay. I was seeing that Bank of America had...
Wait, Ben, do us a favor, because remember not everybody is as financially literate as you or
Yeah, I'll
either
see
of
if
us.
I
So
can pull up the
explain that
article here.
one more time. Like, so I'll just preface it. A short position is like betting against. So the amount of the amount of betting against that Ben's going to talk about, major institutions in a short position, and the amount that they're betting against is like literally 4 years worth of silver productions. So what they're saying is that not only do they think that there's
the visual, by the way, if you want to.
Not only do they not think that there will be silver production for 4 years, but they also seem to think by this bet, we know it's not really the case, but they just reading the bet at face value. Look, first of all, if you stop producing silver, the price would go up. It would not go down. So they're literally betting that we're over the next 4 years going to like multiply by 10 the silver production. And that's not how silver production works. There are very few, if any, silver mines. It's always a byproduct of other mining, copper or whatever it might be, gold. So long story short, what we're looking at is fantasy. The fact that these paper markets are shorting 4 years with the silver supply it's like it means the system is broken. But Ben, go ahead and take that over.
No, this is what people have been complaining about, where right, the size of the paper market is gotten way too big for what like the purpose of it is. And people talk about like the Mr. Slammy when you get like the 1 minute moves that drops the silver price by $1 or $2 just all at once, right? And you look at how much the like volume is on that 1 minute. It's like 50,000 contracts, which is, can't remember the exact number of ounces, but it's something like, oh, that was 40% of global annual mine supply that just traded in 1 minute, right? Which is just absurd, right? So that's kind of the look at this, is where it's like, how, like, do you need a derivatives and futures market for commodities? Yes. But when it grows out of control like this, right? When something's been suppressed for this long, when it goes, it's not just going to 80 or 90. And I really hate the inflation adjusted argument for something like commodities, because a lot of these mines can produce this profitably at current prices. But like you said, the byproduct aspect of it, there's just not that many primary silver mines out there. I have a feeling we'll find a bunch more in the next 5 or 10 years. But when you have this setup where it's been suppressed for really like 20 years at least, but probably 40, 45 years, right? When that suppression unwinds, you're not just going to, oh, nice, it doubled, like sell and move on to the next thing, right? I've seen people talking about 200, 300, and 1,000, like if you're more patient, like heading out to 5, 10 years plus. But you need some serious inflation to have that happen. But when you look at what asset classes are cheap, there's only a couple things that are like very cheap relative to silver, and one of them is platinum. So that's kind of going back to my favorite kind of misfit toy of the last like couple of years, but starting to work now. So the other thing, as far as someone was talking about this, and I'll kill the screen share, but the other thing that's interesting, you mentioned the Asian guy for some of the AI generated like YouTube videos and what you see on Twitter circulating. And I've had, I don't know, 3 or 4 people send me these links, and I'm like, okay, I'll watch it. Like, fine. And I watch it. It's 10 minutes, 15 minutes. And it's just like, just the sky is falling. It's happening tomorrow. Get your silver. Like, he says some things where he's spot on, where you want to own physical, but trying to predict when all this shit is going to hit the fan, I think is just a fool's errand. Like, we know it's going to happen eventually, but as far as like, oh, it's going to happen this week, it's going to happen 3 months from now, 6 months from now, like my guess is 100 plus by the end of this year. And the way things are going, if it kind of keeps moving, like could be 100 by end of Q2 for all I know.
I think it might be 100 by the end of January. I'm serious. I'm looking at the trajectory. I might be wrong. Like, we might not
I
see
won't
100.
complain, because if it's going to 100, my silver miners are actually going to start working. So
Yeah, I mean, I know that sounds rich, but a lot of the things that we said about metals last year sounded rich, and everybody's projections were just completely blown away by the reality of what's going on. So I mean, I looked at the trajectory. Unless we start to see some major consolidations and pullbacks, then my next target is like 96, 97, and that could happen by Friday. I mean, I think we're going to see a panic in, but you know what? I could be wrong, and there could be profit taken, and then things slow down. So we'll have to see how that goes, right?
yeah, I mean, nothing goes up in a straight line, and like when I kind of look at where this train's headed, my guess is that it's going to be significantly higher, and it's going to have spurts where it's 10, 15, 20% in 2 weeks or a month. And then you chop sideways, have a small pullback, and you get people impatient. And it's like, all right, you're setting up for another 10, 20%, right? It's kind of the same thing that's been happening with platinum over the last, really since it broke out in May, where it's, all right, it's going to rip for 2 months straight. And then people are going to start talking about it, and then it's going to go to sleep, and then it's going to rip, and then all that. So I do think it is interesting to see when you have all the stuff with the physical market and you have the setup where it's just starting to get investor attention, and it's like all it's going to take for a little bit of flow, like a little bit of investor flows into precious metals and the miners. There's a chart. I don't know if this is accurate anymore, but I think like at the beginning of last year, you could either buy Nvidia for, what was it, 3.5-4 trillion at the time, maybe. And the other option was you could buy the entire world mining sector, right? Everything from the biggest companies down to the smallest shitcos for, I think it was like a little over 1 trillion, maybe at the time. Right. So this is like Newmonts and Barracks and the guys that are producing millions of ounces of gold a year. Right. You can buy every single one of them for a third of Nvidia. Right. Stuff like that, where it's just, you see these distortions, and this is where it is kind of a shitty business. But when the gold price is ripping and oil's cheap, and when silver's going and all this stuff's going on, right? Your business is a lot less shitty with gold at 4,500 than it is with gold at 1,500 or 2,000. So it's going to be there. Like, there is going to be a cycle. There is going to be a time to sell these things, but I still think we're years away from the end of like the bull cycle for precious metals. So until you see the politicians getting responsible and you see the debt issues getting fixed.
So like never, basically.
I mean, the tinfoil hat is that this is the once every 200, 300, 400 years, like currency reset that we're going through.
I don't even think, so I was going to bring up a chart in that spirit.
Yeah.
So I'm trying to look for like a longer silver chart. Do you know of a good one on TradingView that shows, how far back?
I think the farthest I found only goes to.
I got one going back to like the 50s. I got the Oanda does a good job.
No, the TVC, it looks like it goes back to 1911, but you can't hardly see.
The Oanda goes back to 1802.
There you go.
So let's just do a quick exercise, and then I think it might be time to end the show. Of course, Ben, we got about 5 minutes left, so I'll try to make this very quick. So we're going to take a look at the silver chart, and let me screen this out, and then let me do this, and then let me change this to log. Everyone's favorite toy. So if we go to like 1972, we first came off the gold standard, right? And this is silver. Let me just do a quick measurement. It was a 3,000% gain, guys. So from like $1 to $50, basically, it's 3,000%, 4,000 actually, 3,900%. So if we were to extend from the low in 2015, 3,000%, 4,000. That takes silver to 400, actually to $450. Just bear that in mind. It's just the same move that happened in the 70s happening over again. And by the way, if you want to even like calm that down a little bit, you look at the bottom in the 80s, and then you move that to the top after 2008. That was a 1,500% move, right? But that just took it to the top of the prior move that happened back in the 70s during the panic. So, what you're seeing here is price attempted to break out, got pushed back down in 2011. That's what you call a little cup and handle right there. And if you want to even measure that out from a TA standpoint, even just that has already been, that's not even, in fact, that number on a 1-to-1 is it's $91. So we're already at the top of that. And this is probably going to continue. So you guys just understand, like, the dollars don't mean what they used to mean. We talk about it all the time on the show. Your price in silver to dollars is, I think, within the next 10 years, what's going to matter more is how many loaves of bread or gallons of gas or houses can you buy for how much silver or gold. I think the dollars are going to matter less and less. Just my opinion, though. But Ben, any closing thoughts?
Not a whole lot. Just kind of covered most of it. We did. I think I did want to add a little bit on the AI videos that people have kind of been sending me. Where
we can go a little bit over, Ben. So don't feel like you have to compress it.
No rush on any of that. I'll be relatively quick here. It's not some long drawn out thing. But when you're seeing some of these things, like the question that at least always pops up for me is like, why am I seeing this and why am I seeing it now? Right. And whoever is behind like the AI bot that's like churning out videos faster than any human could, right? There's a motivation there. And whether it's to ramp silver or like basically freeze out the LBMA or like do whatever it is, whatever the motivation is, there's someone playing games, right? And there are definitely things in those videos where they're definitely not telling the full truth, and some of the things that they say are just like flat out wrong. So just be aware that like it's not some impartial source of truth. So that's kind of what I had there. It's just like the latest form of information warfare. So it's going to be another thing that we'll see on the geopolitical side. It's going to be another thing we'll see on like markets. Like all this stuff is interconnected, but it's definitely going to be an interesting year. I think I did not expect it to be off to such a fast start, but here we are in the first week, and it's been an interesting one.
Yeah, Tom Luongo, who we're going to have on Friday at 10 a.m. EST. It'll be me and him. He said it over the weekend that those videos from that guy, and they're spammed everywhere. That's for sure. I know. I have. What
are you guys talking about? What guy?
I'll send it to you. I've sent it to you already. It's the video of the Asian guy. He's AI, and it talks about silver and all that. Yeah. My cousin first sent it to me. He's a Cliff High guy, still, even, believe it or not. And that's fine. I love Cliff High, whatever, I don't want to throw shade, but and then all of a sudden other people are talking about it, and then Tom's talking about it. Ben, you're talking someone's spamming this out there for sure. Like that's what's going on. They're either paying for massive whatever. But long story short, I'm with you, Ben. And an example of truth wrapped in lies was the whole, and again, Tom pointed this out, something about 4 Korean banks stopped their silver trade. And Tom couldn't find anything about that anywhere, and no sources were provided. But then he goes and talks about, things that are going on in the silver market that actually are real. So is it just for engagement? Is somebody a freaking genius for YouTube engagement? Maybe, but I think there's more afoot, and it doesn't mean that the guy's wrong about the silver price but yeah, you gotta really watch out when it comes to info. So I'll leave it there.
I mean, it's shown up on the Twitter feed, and you have a bunch of people reposting, and like, I don't want to magnify it. I just want people to like keep an eye out for stuff like that, where it's like it might not be exactly what you think. So at first glance.
Nice. V, any closing thoughts, sir?
No, I think it's going to be an interesting year, gents, for sure.
Yeah,
Awesome.
I do have some good last minute news. I saw the retarded Tim Walz got booted off the
Tampon Tim.
Tampon Tim.
the Minnesota governor race. So that was good news.
We got to send the GTV link over to Ben. That's a real Ben's gonna appreciate GTV the same way that we do.
What's GTV?
The one with the news with Ching Chong.
That's Jake. That's Jay.
Whatever. JTV, GTV, potato. But I'll fire it off to Ben. I'll have to see if I can find that.
Spending too much time at the Quality Leering Center. So
yeah,
I'm all about AI slop. That's it,
dude.
Yeah.
AI slop is great. A lot of good slop out there in the news. Nice. All right, V, can you get us out of here, sir? Oh wait, hold on. Before we get out of here, sorry about that. Ben, again, tell us where we can find you.
Yeah, just look up Contrarian Corner on YouTube, Apple Podcasts, Spotify, Substack. That's kind of the main areas you find me. And Twitter, I think if you should just look up Ben Kelleran, you should be able to find it pretty easily. So
yeah, it's some of the, like I said, some of the best podcasts I've seen in the financial space. I will give you that compliment right here for everybody to hear. So
yeah, I try not to script it too much and just leave it open-ended for the most part to kind of point guests in the right direction and see where it goes from there. So
all right, V.
And with that being said, thank you all for listening in. Follow Ben, check out our paid sponsors, and with that, Cowboy, take it away.